Aren't you tired of paying rent but struggling to figure out how you can afford to buy a house with the crazy home prices today? Don't you wish that someone could help you pay or even fully pay for your mortgage? How about being able to do both at the exact same time? Well, it is definitely possible and a lot easier than you may think. Stick around to the end of this video because I'm going to give you a real example of how this works. Let's talk. In today's world, if you could do something that could make your life easier, wouldn't you want to do it? If there was something that you could learn how to do that would help make your whole life better, wouldn't you want to learn that? Well, that's exactly what you are about to learn right here, right now. I remember early in my life, being young, not really understanding how powerful or how important real estate actually was. My wife and I, we started off our marriage renting an apartment, and it was great for the time, but we could have saved up way more money and actually bought something sooner than we thought. Shortly after, I really started to learn how important real estate really was and how impactful it could be to our life. That's when we started switching our strategy to save up to buy our first house. And that is exactly what I want for you and your life. By the end of this video, you're gonna have 5 steps to figure out how you can potentially live mortgage free and stop paying that awful rent. I'm gonna give you a house hacking strategy that will change your life. But before we get started, we need to answer a very few important questions. First, what makes buying real estate so much better than renting, and is it really right for you? Well, the short answer is yes. In the long run, between the equity gain appreciation, which is around 2% every year, and the tax benefits of owning a home, it far outweighs renting in the long run. With renting, you only get one real benefit, and that is having a roof over your head, which is important, but you could be doing so much more while still having that same roof over your head. Another question is, do you want to be financially free and potentially create wealth for your family and generations to come? If the answer is no, then stick around because I guarantee you that I can change the way you think and change your mind. If your answer is yes, then this is the perfect video for you because I'm going to give you some house hacking tips that will help tremendously. Let's get started with the process with the very first step that you need to do. You need to start by understanding what type of loan it is that you're getting. The best loan, and really the only loan you really want to focus on, is getting an FHA loan. That stands for Federal Housing Administration and is ran through HUD, or known as the Housing for Urban Development. Basically, it's just the government's way of running housing to help people actually buy. With these loans, you're typically going to put down about 3.5% to 5% of the total purchase price. So if you're buying a $300,000 home, your down payment can look from $9,000 anywhere up to $15,000. You might be thinking, man, Zach, that is a lot of money. I don't know if that's really worth it. Why would I want to save that much to even buy a house? I could do so many other things with it. And that's a great question, and that's exactly why real estate is known as an investment, whether it's your personal primary residence or you're actually buying an investment property. The goal is to make money, to invest in something that can grow over time, give you tax benefits, and overall give you and your family generational wealth. And yes, that can be achieved through just a primary residence. Now, why is an FHA loan so important? Well, that's because under very certain circumstances, it is the only loan that you can get a really low down payment, live in it, and at the same time still use it as a rental property. If you have a house that has like a basement or an attic that's livable, or if you happen to live in a duplex, triplex, or fourplex, you can rent out the other units and stay in one and still qualify for this loan. And the best part of all of this, you're gonna be able to use up to 75% of potential rents to help you qualify. It's going to help you add to your overall income and help you start your journey to potential financial freedom. Now that you know what type of loan you're getting, you need to start to save for that down payment. You should sit down, if you're married, boyfriend, girlfriend, significant other, whatever it is, you need to sit down and actually go through your finances and see how long could it realistically take you to save up. If your goal is to save up $10,000 because that's how much you want to be able to buy, then come up with a plan. And if it takes 2 years, 3 years, that's okay. Just have that plan, stick to it, and start it. And this is where working with a local real estate agent can help you tremendously. If you're looking to get a house, duplex, triplex, or fourplex, they can help you figure out how much the average price of one of those is going for, and that right there will tell you how much you need to save up. After you have the down payment saved up, now it's time to work with the lender to actually get pre-approved. One big thing with this whole process, like I mentioned earlier, is you're able to use 75% of the potential rents to help you qualify. For example, if you have a fourplex and there's $900 coming in rent in 3 of the units, that's $2,700 total. And 75% of that is $2,025, which you can use to add towards your income. Now, most lenders are gonna know this and remember this, but if they don't, just shoot them a little reminder. Now for one of the fun parts. After you've been pre-approved and you have a number, now it's time to work with that local agent who helped you before to go out and actually search for a property that fits your criteria. Let me give you some tips on how to find a good deal and a good property. There's nothing worse than finding a property and overpaying or not getting an inspection. And that's one of the biggest tips I could ever give you. Never overpay for a property. If it appraises for $200,000, don't pay more than that. And I mean, never do this. I don't care how nice the property is or how good the deal may seem. Overpaying is always a recipe for disaster. And if your agent is suggesting this, fire that agent immediately and go find a new one.
Hey, Waterboy!
Yes, Mr. Coach for you.
You're fired!
And the other part to this is getting that inspection. Never be coerced into thinking that never getting an inspection is good for you. You could end up buying a house or buying a unit that has $300,000 worth of damages done to it and you didn't know. This could save you some headaches in the future. I promise you, I've been there, I've done that. And remember, in most states, you're buying a house as is anyways, and you want to know what that condition is before you buy it. And in some states, there's even something called buyer beware. Now, if you have the opportunity to buy something that is in what's considered rough shape, and you can buy this property at a really good, reasonable price, and you know that putting a little bit of money into it will dramatically make a difference, that's something you should definitely consider. Run the numbers, make sure it works, but please consider it because you could be setting yourself up for a huge win in the end. Now, once you find this deal and you have it in place, you've bought the unit, you want to make sure that you actually occupy and then rent the other units if they're not already rented. And at this point, if you don't want the other people to know that you're the owner, you could always hire a property management company. They're going to run everything for you, from finding tenants, collecting the rent, taking care of any damages, taking care of any maintenance that needs to happen. It could be a huge win for you and it could relieve a lot of headaches and take that stress off. But if not, it's okay. Feel free to run it yourself and do it yourself. Once you have all this set up, it is now time to sit back, relax, and actually enjoy either not paying rent, not paying your mortgage, and potentially getting some cash flow as well. Now, let's go through a scenario with a fourplex that I actually found local that I think would be a great option for a first-time home buyer. Okay, so here we go. This is a property that I found. I think it's a perfect fourplex to start your journey. So as you can see, the home price is $355,000. Now, let's assume that we can get this down to $350,000, which I think is reasonable. As you can see, it is occupied by 4 people, each paying $900. So with this deal, you'd have to make sure that you could at least live in one and you could still rent out the other 3. And let's look at the mortgage to see exactly what it would look like. So let's hop on over to Bankrate. I love Bankrate because it's a very simple mortgage calculator and you can definitely use this at any time. So again, let's assume that we can get the home price down to $350,000, which I don't think is unreasonable. And remember, with FHA loans, you need to put anywhere from 3.5% to 5% down. So let's assume we're gonna get 3.5% down. And usually you would have to pay closing costs, but right now it seems like a lot of sellers are actually paying those closing costs for buyers. So we're gonna make that assumption as well, that you're gonna be able to get the seller to pay most, if not all, of your closing costs. We have a 30-year term, an interest rate of around 7%, which is pretty accurate. You might be able to get that down a little bit, but let's plan for the worst. So over here, you can see the principal and interest number, a property tax, which I did look up for this specific property, and that's what it would be about per month. Homeowner's insurance. Usually when you have a multi-unit like this, property insurance can be a little bit more expensive, and we live in Louisiana, so we have higher insurance, but that number could be adjusted. And another big thing is PMI, or what's called private mortgage insurance. But this is just the bank's way of protecting themselves in the case that you may default on the loan, and because you haven't put 20% down, they don't know if you're going to be serious or not to actually go through with making your payments. Just a little side tip, once you do hit 20%, definitely call the lender, have that removed, because they may not do it automatically. Now, this particular unit does not have HOAs. Yours might, so definitely take that into consideration. But with us, right now, with this property, we're looking at right under $3,000 for this mortgage. Now, if you remember me talking about how you can get 75% of those rents to help you qualify, well, let's look at how much that would be. If you have 3 units paying you $900 a month, that's $2,700 a month total. And if you take 75% of that, that is $2,025. And that's how much you're going to be able to add to your income to be able to help you qualify for this. So if you take $2,961 and you subtract that $2,025, really what you're responsible for is about $936 of that mortgage. And that is exactly what the bank is going to look at. Can you qualify to be able to afford a $900 and something payment per month? And so with this property, you have to ask yourself a very important question. Would I rather pay $900 a month and just rent and not get anything out of it? Or would I rather pay $936 a month knowing that I own this property, I get tax benefits, someone's helping me build equity? And here's the best part, because it's an FHA loan, in 1 year, you can move out, rent out that 4th unit, and all of a sudden you're cash flowing. So you tell me, wouldn't that be a better situation? You're only paying $36 more, but the tax benefits and equity and potential appreciation you're getting is so much better than just renting. And just like that, you have successfully evaded paying rent and found a way for someone else to help you pay for your mortgage. And if you're super lucky, while you're living there, maybe they'll even give you a little cash flow on the side. And if not, then just wait a year, move out, rent the other side, and you have cash flow for little to no money. And if you're looking to take investing to the next level, you think it's impossible to actually do that, click on this video right here and I'll prove to you it's not impossible.